Alright, so let's talk a little bit around revenues for Palantir, because the situation here is quite complex. Some of you might have seen total contracts, for example here in 1st of August 2025. We see a 10 billion contract here over a decade. And we see many other contracts as well. 100 million for US Army, for the Navy, and we saw a 240 million pound contract here with the Ministry of Defense. So just take a look at that $10 billion deal. Do we see it in Palantir revenue? No, we don't. For the full year of 2025, we saw 4.48 billion in revenue. So this total contract value is not yet reflected in revenues because it's quite frankly illegal by accounting standards to just put all of that contract money directly into revenue in the profit and loss statement. I had a chat around when it is okay to realize revenue with my editor, and I think that you guys also deserve to hear a little bit more around this concept, because then stocks like Palantir makes a whole lot more sense to understand the financials around them. So for example, I like to use the example of an airline ticket in this case. Let's say you buy a ticket with United Airlines for $200. Is that $200 of revenue for United Airlines? No. Doesn't make sense, right? Well, in accounting, it needs to be like that way, and it will make perfect sense after listening a little bit further in this video. So what would happen if United Airlines sold 1 billion tickets at a cheap price right before the earnings date? Well, they would have a blowout quarter. They would have massive revenue. But what about cost of revenue? They haven't done the service yet, sold the product or the service. The contract has not yet been fulfilled between the buyer and the seller in this case. So if revenues were to be realized, like I mentioned, once you purchase the airline ticket, well, you can just inflate and blow up the numbers, and as investors we won't get a good picture of the actual standing of the business, because there's always a cost to revenue once you execute, once you do the service, once you sell the product, ship it, all of that. And that's why the service needs to be delivered first in the case for Palantir, so we get a correct statement on revenue and on cost of revenue, and in this case amazing margins for Palantir. So this is quite simply why. Otherwise it would be way too easy to game the system and just do some financial tricks to get a good quarter when needed, and they could raise capital on selling equities based on that valuation, and it would be very, very difficult for us as investors to know what stock to buy, what company to put our capital towards. So to even the playing field and to protect us as investors, we have these gap principles on how accounting is supposed to be made. So when you see all these big contract wins, know that yes, they will show up in revenue eventually, although a lot of this contract value has not yet been realized. We can take a quick look. Let's see if we get the summary. So in Q4, Palantir closed total contract value of about 4.3 billion, so up 138% year on year. Very, very strong numbers. They just continue to close these deals, and we will see more future growth ahead. So by keeping an eye on the deals that are being announced, we can see deal velocity, and we can get sort of a slight direction on where revenue is going for Palantir, because first we have these contracts, and then revenue is a little bit of a lagging indicator after that. Hopefully this explanation made a lot of sense. I think that many retail investors are not familiar with these rules. They are quite straightforward when it comes to just normal companies, and then they become even more difficult when it comes to holding companies. But for retail, for us, for you and me, well, we can wrap our heads around companies like Palantir if we put our minds together and just do the research. Alright, that's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.